Welcome to the Royal Ties Podcast. My name is Clarck, the financial credit coach, and I will be bringing you information acquired through first-hand experiences in order to help you increase your credit score, reduce interest rates, increase savings, and eliminate debts. Doing it for the community, from the community, and by community I mean any and everyone who wants to learn and evolve. So let's get right into it. In today's episode, we'll explore the role of credit scores in obtaining small business loans and financing. See, credit scores play a significant role in determining the availability, terms, and interest rates of small business loans. Let's dive in and discover how credit scores impact your ability to score and secure financing for your small business. So as y'all see, I'm not doing a hat today. I decided to give y'all a break. I've been doing a lot of merch work, but I said, let me just, you know what I'm saying, let the hair breathe a little bit and have some fun. It's not always got to be, the same thing, promo. That's not how I function. But let's talk about understanding credit scores for small business loans. A lot of people ask me all the time, Clark, like, okay, my credit's good now. On my personal side, we got it together with the program. Now I want to jump into the next phase and get my business credit going. So I should just be able to get whatever loan I want, right? Yes and no. Your personal credit does affect your business credit, but your business credit has to be built. So when it comes to small business loans, lenders assess the credit worthiness of the business and its owners. So while various factors are considered, credit scores are often a crucial determinant in the loan approval process. So here's how credit scores impact small business loans specifically, okay? Loan eligibility. Lenders use credit scores to evaluate the creditworthiness of the business. Owners. The owners of the business. So your business didn't make no money, right? Your business doesn't have longevity. Your business doesn't have good history, but the owner does. So how the owner looks to the bank is how the business is going to look to the bank at the beginning. So a higher credit score increases the likelihood of loan approval, as it signifies a lower risk of defaulting on the loan. Loan amount. Credit scores can influence the loan amount you qualify for. Lenders may be more willing to lend larger sums to individuals with higher credit scores. It's pretty simple, right? I can trust you. You've shown me you can pay off large amounts for decades. I'm not worried. But when I say lenders may be more willing to lend larger sums to individuals with high credit scores, it's because they've demonstrated responsible credit management in the past, right? The interest rates could be different. So credit scores significantly impact the interest rates you'll be offered on a small business loan. Higher credit scores generally result in lower interest rates, saving you money on the cost of borrowing. Listen, I can tell you from experience, when you have business loans and business lines of credits, you live off those. You literally run your business off of those. It's normal for your business lines of credits and loans to be at higher amounts and you don't pay them off in full every month. You're literally utilizing the bank's money to run your business. It's normal. It's not like your personal credit score. It's different. So when I say that the higher credit scores may allow you for more flexibility, I mean like even the repayment terms. It reduces the need for additional collateral too. If you've got good credit, I don't need to know that you've got your cars paid off or your home paid off. Or I don't need to know that. I don't need you to put up anything because your credit history shows me that you can pay it. I can trust you. On a personal side, that means on the business side, where this is where you're going to be bringing your income from, I'm not going to have any hesitation in giving you money there either because your personal credit history matches. So to increase your chances of obtaining favorable financing options for your small business, it's important to build and maintain a strong credit score. So here are the tips to help you achieve this. Establishing business credit. Don't get it twisted. I know I talk about personal credit a lot. Business credit. Separate your personal and business finances by establishing a business credit profile. This can be done by obtaining an employee identification number, the EIN, obviously their NEQ here in Quebec. You make sure if you're going to incorporate throughout Canada, you have your incorporation number. Separate your business from your personal. Don't make it a personal business. Go incorporate. Spend a little bit more money and have it be a separate entity that only piggybacks off your personal credit for a short amount of time. Once your business is rolling, the income's coming in, and you've proven yourself to the bank, at some point in time, your incorporated company will separate itself from your personal credit. That's when you're winning. That's where I want you to get to. Make timely payments. Make sure that all your business-related credit accounts, such as loans or business credits, are paid on time. Late payments can have a negative impact on your credit score and reduce your chances of securing favorable financing. You'll see that some loans on the business side will show up on your personal credit report at the beginning. Not all, just some. Over time, they'll switch off and they won't be on your personal credit anymore. But it takes time. They still want you to back your business. So your personal credit, that's why it's so important to your business credit. Managing your personal credit. So even if you have established business credit, lenders often consider your personal credit score when evaluating small business loan applications. Therefore, it's important to manage your personal credit responsibly by making timely payments and keeping your credit utilization low. That might be the first time I've said credit utilization low. I did it twice now without any stuttering or anything else. So I'm going to applaud myself, not in the mic, but I know what I'm doing because that's kind of cool. I'm getting there with that word. I hate that word. Utilization does not work for me. Anyways, reduce debt. Keep your business and personal debt levels in check. Pay down outstanding balances and avoid carrying excessive debt, as high debt levels can negatively impact your credit score. Remember, I'm talking about on the personal side. On the business side, revolve it, pay it down as much as you can, but it's different on that side. Regularly monitor your credit. Man, I've talked about this in the past 4 episodes that I've recorded. Monitoring your credit report. You have to regularly review your personal and business credit reports to ensure accuracy and identify any potential errors or discrepancies. Dispute any inaccuracies promptly and take steps to address any issues that may arise. Build relationships with your lenders. I don't know, build relationships with everybody you meet. You go to the grocery store, you talk to somebody, build a relationship. The people who you pay your bills to, build a relationship. The banks, the credit card lenders, just build relationships. It will never negatively harm you to build a relationship. Never. Never, ever, ever. And when you establish relationships with lenders early on, it can be very beneficial because maintaining a positive relationship with your existing lenders and demonstrating your credit worthiness can increase your chances of obtaining financing in the future. Alternative financing options. I hear about this all the time. So if your credit score is not where you'd like for it to be, and if you're unable to secure traditional small business loans, well, the first thing you need to do is call Clarck. Reach out to me on Instagram or through my website, www.clarkcadet.com. If you've been rejected and you need to rebuild, you need to talk to me. I rebuild. I help people get there. But aside from calling me, you can look into different types of alternative financing options. Yes, they're going to have higher interest rates. Yes, they're not going to be as interesting as regular bank loans, but they're the options that you have. These alternative financing options are available, and options include like microloans. So microloans are loans typically provided by nonprofit organizations or community lenders. They often have more flexible lending criteria and can be a viable option for individuals with lower credit scores. I just started my nonprofit, the Cadet Care Foundation. In the future, I definitely plan to do that, to have an option where I'll be able to help people with loans at lower interest rates than these, normal private lenders, so that I can help people get out of the red and into the green. But that's something else to come, but look forward to it in 2024. Absolutely, I'm on it. Crowdfunding. So crowdfunding platforms allow individuals to raise funds for their business by receiving small contributions from a large number of people. This method bypasses traditional lenders and can be a suitable option for businesses with unique products or concepts. If you've got a really good business idea, stop thinking you always need to go get a loan. Talk to people about your idea once you've got it registered and protected. Very important. But talk to people and see people. You'd be surprised how many people are willing to get behind a good idea, me included. So look into that, has always been an option. Business grants. Look for business grants offered by government agencies, foundations, or organizations that support specific industries or communities. Grants are essentially free money that doesn't require repayment. You don't always have to go for a loan. Grants are absolutely available out there, especially if you're in Quebec and you're in Canada and you're working with the Black community. There's opportunity. They want to help fund us. They just need people like me and you to step forward and put things in to help our community. In conclusion, credit scores play a crucial role in obtaining small business loans and financing. So, by understanding the impact of credit scores, building and maintaining a strong credit profile, exploring alternative financing options when needed, and seeking professional advice, that's me, you can enhance you can enhance actually your chances of securing the financing necessary for your small business. Success is right there. When I say right there, it's in your hand. Send that message. Go on my website. Fill out the form. Let's talk. Let's have a conversation and see. If I can't help you, I can point you in the direction of who can help you. That's what networking is. That's what working for your community is. I hope you learned something today. If you did, please like, follow, and share. Tell a friend to tell a friend. Let's bring financial literacy to it. And stay tuned. Cadet Care Foundation. It's already in the works. Like I said, for the community, from the community, I'm bringing you something new, and I'm not going to stop. Let's get it. My name is Clark, the financial coach, and my motto is simple: pay attention or pay for lack of attention. Please follow me at Clark, the financial coach, on Instagram.